All right. All right. Well, this was just for annotation, so don't mind that. Let's get into today's analysis. We did have overnight expansion, so um, not necessarily something we want to see, uh, especially you know the day right before NFP. So today isn't necessarily the highest probability day. Um, so today, although there is news, there is high impact news at 8:30, I believe. It is the 8th, right? 7th? 8:30, 10 a.m., right? So there's high impact news today, but because it's right before NFP, is not something I'm too keen on jumping into. So we're just kind of gonna watch the market. I was originally not gonna go live today, but I was like, it's fine, I'll just go live. So right now, we are in between equal highs and equal lows, right? So this is something to take note of, where if we are in a spot like this, then we can expect some sort of low probability price action, right? SMT playing out on the 5 minute. Paying attention more so for the like you could be looking at this SMT divergence. That's fine, but this has already gone. You know what I mean? And then so right now my trade on the higher time frame, it can be framed on these highs or lows, right? So we have equal highs, equal lows. When we're between them, we're not necessarily looking for the highest probability trade, especially when we don't have a clear conviction in the markets, I guess. That makes sense. So it's right now, I guess we do have SMT on these lows over here, but yesterday I was leaning bullish, and the reason I was leaning bullish is because it looked like we were going to flip into a market maker buy model, right? And so after yesterday, it looked like we were bearish actually. And then after last night, we looked bullish again. So you can see how we're just continuously flipping bias. And so that's not necessarily the kind of narrative you want in the market, if that makes sense. So I would just say today is a day you want to most likely tape read. And the reason I say that is one, it's the day right before NFP. Two, we have nothing to really work off of in terms of price, I would say. If you want to look for trades, then I would say pay attention to what is immediate order flow doing, right? So pay attention to these right here, um, where we have an SMT divergence with YM already in the morning with this fair value gap. So if you took this trade, then this is a fine trade. I don't see anything wrong with that. But if you're not in a trade right now, I would just sit on your hands, especially with this London expansion. Because when London expands, we can expect for some sort of New York choppiness, right? And so we have news in 10 seconds. Yeah, so right now my targets are this, right? Yesterday's target was still these equal highs. So if we like right now, this expansion right here from London though is telling me that we are bullish. So if that's the case, then NFP, right? We're generating liquidity for NFP, and you can see that, right? So once again, more NFP, we could see some sort of drive into the highs or the lows, and that's why it's low probability to me, is because I can see both happening. Any questions on that, or is that clear? Because I feel like by saying that, it makes today's trading really, really boring, because it is majority just tape reading and not necessarily pushing a button. But that's just what trading is, right? It's a lot of waiting. Good morning, Snows. What's Bitcoin doing? Just moving sideways, right? Still looks like a good spot right here. Could go higher. But after such a big expansion higher, I would assume it would go sideways at least a little bit. Yes, that's another reason, Snows. That is a good reason. If you draw an overall range, right? Draw an overall range, we're at equilibrium. And so we can look for nothing to do. Also, I'm not gonna lie, if I sound tired, it's because I didn't sleep until like 5 a.m. Some crazy shit happened last night, and I just wasn't able to sleep. I was in the London session ready to enter at the bottom of manipulation, but I hesitated entering because I did not see SMT with. You have considered higher time from SMT that caused a few days back. With was caused a few days back. Sure. Honestly, I think this would be a good time to study London session. We can take a look here. So we have this massive SMT on the lows. So this is already like why I was leaning bullish yesterday. Remember how I was saying we had this yesterday, so I was leaning bullish, and then I wanted to see purge of some sort of sell side liquidity on one of the markets, but we actually ended up getting it on all three markets in the afternoon. And so that's what started to make me a little uncertain, because if you're looking objectively from this point here, what does that look like? It looks like a market maker sell model, right? And so from this point, you would expect these equal lows to be traded into, and then overnight we just expand higher. So this now doesn't make much sense to me, essentially. The only thing that does make sense to me is that if we are in a larger scale market maker buy model right now, right, and we have SMT divergence confirming that this right here is that accumulation phase complete, we're actually going higher, right? So that's basically what I'm looking at right now, because we have this massive SMT massive SMT divergence on the lows as well. So right here, massive SMT, indicating that this could be the smart money reversal. Immediate order flow pointing upwards, SMT divergence on the lows like this, right? and then that could be your indication that we're going higher. This SMT is with the ES, by the way, for those looking. And so let's start dissecting a little bit into the London session, right? So remember, this is my model right here. Actually, this is a perfect example of my model where you're really just dissecting the quarters of the day, right? Wow, this is actually beautiful. This is the most amazing. Like, just looking at this, what does it look like? I'm gonna let you guys answer in the chat. What does this look like, everybody? Exactly, AMDX. Wow, this shit's freaking amazing. There is indeed. Looking at this one, that's a hourly fair value gap right there. Okay, so you can or can like you don't have to use this hourly fair value gap. You can if you want. If we're just using the quarters itself, right? If we're identifying AMDX, then we can already see that we have a raid on time-based liquidity, right? And during London session, after we get a time-based raid on liquidity, then we're just looking for entry, essentially, right? So we can look for a market structure shift, inversion fair value gap, balanced price range to enter on this trade. And if you're trading the 15-minute chart, then you could have entered on this candle closure because this inverts all the gaps, right? So you can just enter here, stop loss below the low if you want, below the order block candle body if you want. I put the candle wick low just for, ease. And you could have caught like a nice 2R trade like that. And so if we start dissecting price within this area right here, right, let me show you something else. What happens if we split this into more quarters? What does that look like, guys? Wow, this is actually such a beautiful example. Yo, honestly, the fact that I didn't sleep last night, I should have just been trading London, no cat. I'll let you guys type the answer in the chat. Give you guys a couple minutes. Or honestly, not really a couple minutes. I would consider this an AMDX. I'll be honest. I would consider this an AMDX. And I'll give you my reasoning. Right? So right here, you have accumulation, right? So we always use Q1 to determine or define our profile, right? So if you have to ask yourself and be honest with yourself when you're back testing as well. When you're watching price print during Q1, what does it look like? It looks like accumulation, right? So you're going to assume that this profile is already accumulation. And so I wouldn't say it's XAMD, I'd say it's AMDX. And so we have accumulation, manipulation on these lows, right? A lot of these lows, manipulation. This drive lower right here creates SMT divergence, right? Was it with this low or was the other low? Let me just make sure so I'm not spewing bullshit. Okay, I'm just gonna say this first low create the SMT divergence already. So now we can look here. Actually, I'll just exit replay mode. I feel like I'm missing something. My brain's not working. Okay, so this original run right here, you don't have SMT divergence. The only SMT divergence you have to work off of is this SMT divergence right here. So if you wanted to catch this trade, you're just gonna have to like blindly enter pretty much. But with that, with the model I used for the 400k, but why sometimes n continues the first third of next q. Honestly, I would just look at this case as quarterly theory is, well, this is what I say for about quarterly theory is that it's more of a framework than a set in stone thing. So in this case, it's like you have manipulation, and you might have been like faked out right here, for example. And then right here, once we really took out this low. Look at 1 minute. Okay, let's take a look at the 1 minute. I feel like I wouldn't really, this isn't really something I would look at though. In terms of the 1 minute, I would really drop down to this. The only SMT I'm gonna say that you could have entered on is this one, to be honest. If you're using SMT, this is where you would have looked for your entry. In terms of your precision swing points, do we have one? I didn't see one. On the 5. As you could only yeah, you could only use the 315 candle. I haven't studied it in depth enough to understand if it can be used in this sense, but yeah, I would assume it has to be the swing point because it's called precision swing point, right? Swing low. And then once that occurs, you can look for more precision swing points that become somewhat order blocks, for example. So in this case, you honestly, like, the only thing you have to trade off of is that 1 minute SMT divergence with this if there's even an about, yeah, this 15-second order block, 15-minute order block, or what's it called, RDRB. Like, that's pretty much all you had to work off of last night. So not the cleanest trade, but in terms of the profile, it looks hella clean, right? Accumulation, manipulation, distribution. And then if you're referring back to the daily quarters, so let me delete these smaller things. You can also refer to the true day open at that point, right? So we're below the true day open. We're digging into a higher time frame PD array, which would be like an hourly, or I guess you could say we're in a 4-hour order block. But once again, that would be kind of pushing it. It's like I can find reasoning for like a lot of different things, but doesn't make sense. You have to ask yourself that. It's like that's another thing when you're backtesting. You have to ask yourself, does it make sense what you're like saying in terms of analysis? Because right now we have that hindsight data, so we can be like, oh, there's this, there's that, there's this, there's that. But is it realistic? You know what I mean? So I just say here is like using the day. I think daily quarter is the cleanest here. I'm gonna be honest. Accumulation, manipulation, distribution. And so if we're looking at that, then we can look for we can expect New York AM to continue higher, and then we'll see how New York PM session ends up. But once again, large range expansion in London session usually offers a choppy New York AM session. So have to be a little careful here. For those of you that are trading. Once again, if we are in a market maker buy model, this is all I see right now. Like my eye quite literally only sees this. That's all I can see. This SMT and market maker buy model. Is it pretty? Not really. Can you do projections, please? Yep, I got you. Of the overall market maker buy model, I'd use this projection right here. Yeah, that's the projection I would use. That way I can show you guys the levels. Is your video that got you 400k funded the approach you use to the market every time? No, I wouldn't say it's every time. Um, I'm releasing the SMT divergence lecture. I think I'll probably do it today or tomorrow at 12 p.m. Depends if I can do it by 12 p.m. today. And then in that I've added like extra examples essentially, and you'll see that with SMT divergence is every single trade I catch is using SMT divergence. So once again, my model is pretty simple. That model video, it gives you framework on top of my model, but my model is really just this. This is literally my model. And so because this is pretty broad, I would say that's why it's so versatile. It's like I can use this in context of a lot of different things. So when it comes down to narrative, you'll always see me switching around. That's why it's like market, but majority of the time I am just looking for market maker buy models, market maker sell models. That's pretty much it. So like once again, applicable in many different narratives. It comes down to higher time frame narrative. I can find trades within a hourly market maker model using this right here. I can find a market maker model within a lower time frame to enter and trade that too, right? So it's just very versatile, and I'll cover it more in depth inside the SMT divergence video. Let me take a look here. Snows 5 minutes. This does look like a 5 minute as well. I would just say you can mark it up like that, but there's no SMT divergence here. So personally, I wouldn't, but you know, we pretty much have hindsight at this point, so it worked out, you know what I mean? So if I were to say something overall leaning bullish, but I can frame a trade going both sides. So that's why it's just same, quite literally same as yesterday, right? Yesterday is like I was bullish, but I could frame a trade going both sides. You know what I mean? Yesterday we ended up having like a seek and destroy, which is pretty crazy. It was like a very large range seek and destroy too. But honestly, if you're able to anticipate seek and destroys, I kind of like them because you can make a lot of money off of them. Like how we caught the top and bottom last night, like yesterday. That's when seek and destroy is pretty crazy. Isn't there a 2100 to 3M SMT with DXY? Yes, that would be a DXY SMT divergence, but we don't need to use DXY in this case because ES is already giving us that SMT divergence, right? So we can just look at this. It's the same SMT, but yes, that is the SMT. Could be that 15-minute SMT divergence. Once again, what you're looking to confirm that SMT divergence, just look for some sort of market structure shift, right? To confirm it, and you can go lower from there. So if you ever struggle with identifying SMT divergence, then you can really just wait for a market structure shift to confirm the SMT divergence. Q3 to Q4 weekly cycle. Take a look. Oh yeah, I was looking at that. Actually, I was just looking at the time. I was like, yeah, that's most likely bullish SMT. But even just looking at it narrative wise, like, okay, let's say I didn't know about quarterly theory. This is already like this is something I'd be looking at, like this SMT on the lows. On top of that, earlier I checked the time. It is indeed what you're talking about. So even when you trade indices, consider also DXY movement. I asking this question because last days we couldn't predict anything from movement of DXY. You personally consider DXY. I look at DXY for like a longer term correlation of some sort, and then whenever you see me referring to DXY for a short term correlation, it's because I can't find a correlation um between ES and YM. So it's like, for example, if we were looking at trade during the London session and we couldn't find SMT occurring down here, then I could potentially find that on a DXY. Right? So we have SMT with DXY right here. So that's your trigger to enter the market instead, rather than using YM and NQ or YMES. So I guess this is what I'll say about DXY. How I use it is use it for long-term correlation, and if you need an immediate confirmation of some sort and ESYM NQ is not giving it to you, then you can refer to DXY. Right? So this here is a SMT with DXY. The market structure shift confirmation is on the same time frame the SMT is identified. Yeah, on the same time frame. So we can see how boring 8:30 news was, right? I personally believe that we're just engineering liquidity for an FP. I just realized Cheap posted this in a premium chat. Really good analysis, Cheap. Exactly what I'm looking at. In your SMT video, can you spend a little segment on spotting SMT? I don't seem to spot as well, thus I don't feel confident using my model. I think that's more of like a backtesting thing, right? To be able to spot them, you just have to backtest to begin. The thing is that whenever you're taught something new, you need to go into your charts and then, dig through it so that you can anticipate for it, right? Because if you don't know what it looks like, then how can you expect to anticipate it, right? And that's what I say for a lot of new traders. They're like, oh, I'm going to go straight into backtesting. What software do you use? Well, have you even developed your model, number one? Like, like newer traders, they definitely for sure do not have a model to even backtest. And so the fact that they're even trying to use replay mode to backtest already, it makes no sense. Because if you don't understand what your setup looks like, then how do you expect to anticipate for it, let alone know what it looks like? It's like if I went on my chart right here, I can tell you that my model is okay. Like my model is obviously going to be in this fair value gap. My model is, let's say, not the clearest examples here, but like here, it's like extreme. This is so obvious right here, right? It's like my model is going to be here for sure. My model is going to be right here for sure. I can't even drag that out. My model's gonna be in that fair value for sure. My model's gonna be in this fair value gap for sure. My model's gonna be in this fair value gap for sure. So once we bias flip, okay, now we're looking higher. Okay, my model's gonna be in this one most likely. My model's gonna be in some sort of array here as well. We can look this hourly fair value gap. It's most likely appearing right here into this high, right? Same thing. It's probably my model here. I didn't catch this one though, actually. Did I? I think I actually took a long. This is when I took a long. So like I can identify where my model is most likely going to be already, just looking at hindsight data. Okay. So until you're able to spot where your model is most like it's gonna obviously be, there's no point going replay mode to try to see it if you can't see it with like all your data in front of you. You know what I mean? Yeah, I got you thriving. I'm gonna highlight them. I can highlight them like this. Make it bold red right here. And then I'll annotate SMT. And so once I annotate this, you guys can go into your own chart and then correlate it to YM, ES, and then that can be your practice. But once again, it's like you can literally just go through your chart and like practice looking for SMT. So it's like right here. Okay, we have SMT with ES on the highs, right? So you can see SMT up here. SMT divergence on the highs. Okay, so practicing with spotting for SMT. We have SMT over here. No SMT, right? Do we have SMT on these lows? We do have SMT right here, right? With YM. You're just going through your charts to spot these. Yeah, I'm good, Snows. It's more of a personal thing. I think it's sorted out. Yes, took out previous day high, QNI on SMT in the highs, no confirmation yet. Yeah, so right now in live data, you can look. I think it's actually easier to low key. It might be easier to spot in live time, but at the same time, it's like you need confirmation for it, right? So that's what makes it difficult is getting that confirmation because you're getting SMT left and right essentially. So if you're paying attention to this high right here, you're looking at ES as well. ES took this high. So you have SMT as of right now. And the reason I don't annotate it right away is because you never know if price is just going to drive this high. You don't know. So you have to wait for confirmation before you can really say that SMT has occurred. Yeah, you can confirm it with a market structure shift. I think market structure shift is the best way to confirm an SMT divergence, to be honest. And then you'll find your cleanest trades, to be honest. Let me pull up an example. So this is a trade I took on January 24th, I think, or 25th. So on the highs here, right, we have SMT divergence with YM. And so what confirms this SMT divergence is this market structure shift right here. This market structure shift lower. This light bulb indicates that market structure shift. And so I'm immediately paying attention to this balanced price range right here. Why do I call this a balanced price range? You could just use the fair value gap, but I call it balanced price range because there's an RDRB overlapped with a fair value gap. So that was my quote unquote balanced price range. And so I entered a short right here. From here, trading lower, just managing our trade, right? And then I think I took another short somewhere here because there's like a little SMT divergence. And then traded straight into the target. Right, original consolidation. Sorry, my throat's a little dry. Original consolidation, and then you have SMT on the lows here for accumulation. SMT on the highs over here for a smart money reversal. SMT divergence on the highs over here. Oh, somewhere over here into the original consolidation. So this is like a picture perfect trade pretty much. Are there other ways to confirm SMT divergence? There is. I'd say like I feel like a balanced price range is the best way to confirm it in my opinion, but sometimes what I do is if I'm very, very convinced, so like say here, I'm very convinced that there's going to be SMT divergence right here. So then I'll just drop down to a lower time frame and look for my entry. So let's say right here is SMT with DXY, right? So from here, you can start looking. Okay, if we have SMT with DXY, how can I get into this turtle soup right here? And this comes with a lot more discretion for sure. Like if you don't get this part right, because it requires a lot of narrative building, if you don't get this part right, you're going to get stopped out for sure. And so from here, I'll drop down to the 15-second and you're going to find your entry right here. Right? This fair value gap would be that entry. If you miss that, then you could have entered on this RDRB, right? Or this liquidity void, or whichever you want to enter. Or you can enter on this market structure shift, enter on balanced price range, enter on the inversion fair value gap, right? So many options. And so if you enter down here, what it would look like on the 5-minute is you would end up, it would look like a turtle soup, right? It's just dissecting those little fractal price movements so that it looks like you're entering on the wick on the higher time frame. That's what you're doing essentially. It's like we're entering in the wick, and that's what power of 3 is. We're looking to enter in the wick of the daily or weekly range. That's what we're trying to do, and that's why there's true opens too. So if you have your true open, what is that really? It's buying and selling within the wick. That's what it is. I'm sure you're all familiar with power of 3, but I'll just explain it here. So if you're looking for a bullish candle, at one point your candle was bearish, okay? So say this is a candle, it just opened, and then you're looking for a bullish price action, right? So at one point, your candle looks like this, okay? And so when we start trading higher, sorry, give me 1 second. Green, put the little wick here. Right, so as we're starting to trade higher, this area, when price was pushing lower like that, that's where we're getting into trade. That's below the true open, right? We're looking for buys. That's why we use the true open the way we do, is because we're actually positioning ourselves inside the wick of a candle. And so once we push higher, this is where you'll be in your trade already, right? So let's just say you have accumulation here, manipulation into, this is the wick. This is the creation of the wick, is that manipulation. This is where we want to get into our trade right here. Market structure shift, we're in our trade within the wick and we're looking for expansion higher, right? It's exactly what we're doing, is we're looking to position ourselves within the wick. Right? Does that make sense to everybody? Does everybody understand that concept of power 3? Okay, perfect. So that's pretty much what we're doing. And so understanding this concept in a fractal manner, we can now, that's why quarterly theory is so effective, is because by just simply using the filter of premium discount, using time-based levels, we are able to position ourselves in the wick. That's why it's so effective. All right. Like, why do we buy below the true day open? Why do we buy below the true day open is because when price was down here, this is what the daily candle looked like. This is what the daily candle looked like. I guess we could add a wick on top to make it even more realistic. Right? This is what the wick would look like. This is what the daily candle looked like at one point, and people are probably trying to sell this, okay? And during the London session. And so this is where we're actually looking to buy. Why is that? Because we're below the true day open. This is where we're looking to position ourselves inside the wick, right? So as price pushes higher, we create that wick on the low, we flip bullish. And guess what? If we were trading London, we'd already be positioned right here, for example, in this fair value gap, right? And so what does that look like? We just positioned ourselves in the wick of the daily candle. And that's why it's the daily cycle, right? So that's power of 3. That's what we're trying to do here. All right, so imagine, once again, London large range expansion. Imagine you're trading New York AM right now. Are you having fun with this? 9:30 a.m. open in around 15 minutes. So let's see. I think it's just gonna be drive straight up though. That's my prediction. I think it's gonna be drive straight up. And then I've been looking at these equal highs. You can look at, once again, like I pointed out yesterday, all this low resistance liquidity. So I can see ultimately this inefficiency resting above liquidity can be our drawn liquidity. Like my little drawing. Kind of clean, no? Fire. This is Enigma. I can't. Bro, I need some freaking sleep, bro. My brain is fried, yo. If you guys don't know about the box method, I'll show you guys right now. It's actually extremely, extremely accurate. Measure to the high right there. Predict where we're gonna go to. Now we're gonna have to do a little bit of math. Oh, this looks like a terrible box. Is being above or below true week open, true day open, true session open is one asset? Yes, that is a form of SMT. Correct. Very good eye. We have that in addition to regular SMT on ESNQ. Yeah, you could look at it as SMT is definitely good. All right, so let's see if we're able to rip into this equal highs right here. Looks good so far. Yeah, it does. Oh, Dan, you missed the biggest trade. You missed the biggest trade of our lives. You're late. We entered a trade down here during London session. You missed out, bro. Missed out on the 20R trade. You snooze, you lose. You know what I'm saying? So if we're going higher, I'd like to see us drive through this high right here. That would be ideal to get displacement higher. Yeah, if you don't have a matching Lambo with us, you can't be here anymore. I don't know if you want to trade against us, Daniel. Yo, that'd be low key kind of sick, no? My trading view background color as a wrap, like these colors as accents of some sort. I could low key see it. Blue could be like the color of the brakes. Inside the wheels. I forgot what they're called. Get some of that gray accents around the car. And then you can get some blue accent on the inside the car as well. So inside the car would just be blue and this black or this gray. Blue stitching, this black leather or whatever. Suede. Yo, that's kind of nice. It's time to get a Lambo, guys. I've been inspired. SMT tires. That's new. Best agent Valorant. I used to play Jet only. And I think I still only play Jet to this day, but you know, sometimes I play Reina if I feel like just turning Valorant into a solo player game. Yo, only plat is crazy. Daniel, I think you're gonna need some coaching, bro. I'm kidding. Elijah's really good at Valorant. 5 minutes until 9:30 open. We just pipped the high. I'm just saying. We just ticked it. So, you know. Oh, let me take a look of that, Daniel. There's nowhere. Yeah, that's exactly what Snows was looking at too this morning. The higher time frame narrative is telling me that we could see higher prices as of right now. So I'm just staying true to that. So even if we got bearish price action here, I just see it as some sort of retracement or manipulation. The standard deviations change your bias or just use as confluence? Uh, like it depends on the context, right? It's like it changes my opinion if it's in alignment of the higher time frame narrative. So it's like my higher time frame narrative right now is a bullish market maker buy model, right? We have this SMT on the lows. So I'm looking at this as of right now, a accumulation phase completed. That's why we got that massive run higher. Is it the cleanest? I wouldn't say so, but it's also Q1 of the month, right? So take it with a grain of salt. There's also NFP this week, so we can see NFP run out engineered liquidity from this week. So that could be lower or higher. $9:30 open. Woo! Let's see if I was right or wrong. Parallel gap and equilibrium also aligns with. Wait, let me read the whole thing. I was thinking this leaves S&T with YM, retrace into 1 hour. Parallel equilibrium, high prices. I would only look at the 1 to 1.5 standard deviations when we just trade into the -2, -2.5 though. That's when I would use the -1, -1.5. Because usually when you're reaching that -3.5 to -4 standard deviations point, that's like when your market maker model is completed, right? I'm probably gonna hop off a little earlier today at like 10:15 after J Powell speaks. And then tomorrow we will be looking for something to do in the market. Most likely after NFP, there will be something to do. You're good, Daniel. Not a very exciting open, not gonna lie. I'll make this, you can see through it so that we can actually see the candlestick. YM is looking pretty good for my expectations, but ES and Q are failing to follow as of right now. That's for today. Then I'm gonna jump into Jesse's. Say hello. Yep. Take care, bro. Take care. So far, so good. Some levels to look out for these fair value gaps as well. So if we invert these, look to find support, right? Exact same thing. Let's take a look at DXY. Yeah, DXY looks pretty bearish here. Looks like DXY is actually just going for these lows because this is a daily market maker sell model right here. If we get into these lows, if we go to the daily chart, market maker sell model, right? So looks pretty solid so far. So I think we're going to be seeing higher prices overall in other assets. Taking a lot of liquidity here, so I want to watch out for that. We're just gonna delete these lines because they're kind of bothering me. All right, so right here is a point of a lot of resistance. I wouldn't say actually not a point of a lot of resistance, but like a point of a lot of liquidity, so we can see some speed bumps along the way, if that makes sense. ES has already taken all these highs as well, so that's something you can look out for. Get a market structure shift potentially to confirm the SMT. After Jay Powell speaks, we'll most likely get a clearer direction of price. Because right now we're kind of just we displaced higher and now we're just falling back into the range. So there's still nothing extremely clear to me. Kind of just tape reading, right? So until it's obviously like very painfully obviously going somewhere. I'm not interested in much. And I think the 10 a.m. news from Jay Powell will give us that direction essentially. So once again, news at 10 a.m. You guys can look for a trade starting like I'd say like maybe 10:25. Is a 635 wick significant to the thing you talked about yesterday or no? Yeah, you could look at that. Right, we're at a key level right now. Look at this potentially. Not something I would want to execute on though right now. Although this does look pretty good. If we are going for a retracement, this looks pretty good. If we're going higher, then it's this inefficiency above price, right? So once again, we're in between 2 points of uncertainty, which is why I'm not pushing any buttons and just looking at price right now. But for example, if we tapped these equal highs up here and this inefficiency on the higher time frame, and we started framing a trade like this into low resistance liquidity, then that's something I'm willing to take a stab at. But as of right now, it's kind of just in between both levels, right? Just want to try to make it as high probability for yourself as possible. That's the end goal here. So for those of you that took, okay, even if you didn't take a trade, you don't even have to like, I'm going to just speak to those that did take a trade this week, those that are profitable this week. Okay. If you're profitable this week, is there a need to push any buttons anymore? Not really. You're already up on the week. There's no need. If you haven't pushed any buttons at all, is there a need to take a trade during low probability conditions that could potentially put you into drawdown? No, there's no need for that. Right? This is something you can avoid by being patient. If you're at a loss right now for the week, do you want to endure more drawdown? You know, like it's just you have to think of the risk before the reward. So I guess what I'm saying is whenever you enter a trade, think of your losing trade, like just visualize yourself losing the trade because that could very well happen instead of visualizing the win of the trade. And then you have to be objective with yourself too. What variables within your trade are making it so high probability that you can't frame it any other way? You know what I mean? And if you can come up with a narrative for both sides of the market, then that's low probability, right? So right now you guys can look at that low I annotated. If we end up driving that out, then you can look for an SMT on the lows, right? So I'm already anticipating that if NQ drives lower, YM and ES is a little more reluctant, it could create that SMT divergence on the lows. Right, so SMT on the lows. I'm still not pressing any buttons. I'm just tape reading. And I get okay, I'm actually not pressing buttons today. Yesterday I pressed the button. Today I'm actually not pressing buttons. So this is what I'm looking at as of right now. It's not confirmed yet, but it's what I'm looking at. Any questions? Or are you guys just kind of chilling? Type a one in the chat if it's so far so good. All right. So far so good. All right, my bad, guys. My bad. Yo, I'm kidding. So what I'm paying attention to mainly right now is if we can invert this gap. That's immediate order flow, right? So how are we respecting immediate order flow? If we displace through that high, That will confirm the SMT rate. Yeah, so right now I'm actually just paying attention to immediate order flow. You can confirm SMT with inversion fair value gap, balanced price range, or market structure shift. Those are the three things that I personally use the most to confirm it. So right now, if we're able to flip this, then I'd be right. This equal highs up here is what I've been looking at this morning. Or sorry, not equal highs. The low resistance liquidity run into the inefficiency resting above. So I can actually highlight that for you guys here. We don't have the higher time frame PD array, not that I know of. Nothing to frame our trade off of right now. Like earlier, if you wanted to take a trade at 8 a.m., for example, you have a frame because you have that SMT on the lows with YM trading into fair value gap, right? So, like I said yesterday, you can have SMT with. Actually, was it yesterday? Or I said it in my SMT lecture. You can have SMT with fair value gaps. It was yesterday? Okay. Now we've closed above it. I'm what I'm looking at is that this order flow, immediate order flow, has been disrespected, right? And so we're leaning more bullish since we're inverting bearish order flow, which is that bearish fair value gap pretty much. And so if we can create a balanced price range here, even better. But right now the draw is this first high, and then I'm expecting this high or this inefficiency right here above the buy side liquidity, right? So just to check my understanding, the SMT at the lows is the manipulation move, so news should drive price to draw on liquidity, acting as acceleration. Essentially, yes. Does anybody know how WAP works in terms of your video uploads? Because I feel like I'm just uploading endlessly, and is there like a storage capacity to that? Or like, do I just keep uploading to it and it's just wherever okay? I think generally waiting like half an hour after news is a good spot. Like maybe 25 minutes, you can start looking. Okay, perfect. Thank you guys for that. Yeah, WAP's been extremely good. I'm not gonna lie. Like, there is a pretty hefty fee for like when people subscribe, but it's like I feel like for the features you get with their website is pretty good. So I'm assuming price is just kind of stalling right now for news. minute 30 here. Appreciate that, Clyde. Glad I'm able to help you guys. Now we have created that imbalanced price range. See if we get a dig into it. Higher. So now is Powell speaks. So we can expect some sort of volatility injection eventually. Maybe within 15 minutes, hopefully. Yeah, bro's clearing his throat right now. You know what? We can actually search it out, I'm pretty sure. Jay Powell. I don't even know where to find it. Jay Powell. Live. Ah, here it is.
Good afternoon.
This is not it. Not it. Inflation is gone. Moon. Ah, thank you, Snows. I was looking for that.
Housing affordability remains at its lowest level in 40 years. But inflation isn't the only concern I'd like to raise. I'd also like to address the economic impacts of illegal immigration. During your recent interview on 60
I'm so
Minutes,
ready to
you
watch
stated
him
that
say something and the
over
market
time,
just fucking moons, bro.
the U.S.
Or it
economy
drops
has
to the
benefited
ground.
from immigration. Let's be clear. America is a nation of immigrants, no doubt. But when we talk about illegal immigration today, we must also face the dire reality that our towns and our cities are suffering from the adverse impacts of illegal immigration facilitated by the Biden administration's
What
open,
just happened?
unsecure, and unsafe southern border.
Damn.
Because of President Biden's policies, we've seen
Let
over
me make it
7
smaller.
million illegal immigrants cross our borders in just 3 years. By the time this election happens this year in November, the numbers suggest it could be as high as 10 million illegal immigrants coming into our country.
Oh, that's bearish news, isn't it?
So we
It's GG's.
cannot have an honest conversation about the benefits of legal immigration
Yo, it's over.
in our labor force without also addressing the elephant in the room. Our
First action.
country
Technical analysis does not matter anymore.
our
It's wraps.
economy
Go next.
strained
GG.
under the weight of illegal immigration. In fact, recent reporting has highlighted that cities and states across our country are struggling to keep pace, and some have been forced to cut public services to Americans in order to fund the cost of feeding and housing illegal immigrants. One clear example we saw in New York City were the poorest kids in the city,
That's a lot of bad
minority
news.
kids
And
in the city, were stuck at home because
Dave Powell
the
goes,
city
"You're
was
wrong."
using their
It just goes
schools
fucking
to
to the moon.
house illegal immigrants. Another example, the city of Denver recently announced that some of its employees may have their hours cut in order to reallocate funds toward the city's migrant crisis. How in the world is that fair to Americans? It's not. We must get the illegal immigration crisis under control, because if we don't, our local economies will continue to be crushed and opportunities will continue to be stripped from our citizens and their families. Finally, as if inflation and the negative impacts of illegal immigration were not enough, the tsunami of regulatory red tape coming from our financial regulators further threaten economic opportunity across the board. For months, we've heard bipartisan criticism of the Fed's Basel III endgame proposal, which will restrict lending and access to credit for those who need it the most. I was certainly pleasantly surprised to hear your comments
It really
about
is,
Basel
Carson.
III and your thoughts on its future. When 97% of the comments that you receive are negative, that's good news. Good news for the American consumer. Good news.
Good news. Good news, everybody. RTA is gonna work here. Guaranteed.
Perhaps even
RTA is gonna work.
millennials who would love to become a first-time home buyer. The opposition to Basel III comes from diverse array of interests, from community leaders, farmers, to housing groups. We've even heard opposition in this very room, on this very committee, from Democratic senators. I look forward to hearing your testimony and looking forward to asking some questions as well.
Thank you, Senator Scott. We'll hear today, as we do every 6 months at least, from Chair of the Federal Reserve, Jerome Powell, on monetary policy, the state of our economy. Please proceed. Thank you for your service to our country.
Thank you, Chairman Brown, Ranking Member Scott, and other members of the committee. I appreciate the opportunity to present the Federal Reserve's semi-annual monetary policy report today. Federal Reserve remains squarely focused on our dual mandate to promote
Everybody, good news.
and
Good news.
stabilize the
Bye.
American people. The
Bye.
economy has made considerable progress toward these objectives over the past year. While inflation remains above the FOMC's objective of 2%, it has eased substantially, and the slowing in inflation has occurred without a significant increase.
Bro's
in
reading off a
unemployment.
script.
As labor market tightness has eased and progress on inflation has continued, the risks to achieving our employment and inflation goals have been moving.
Oh shit, we're going. Oh, bad inflation, bad inflation, bad.
Inflation risks. And
Oh
if
shit!
acutely,
Oh shit!
high
Inflation bad.
poses significant hardship, especially on those least able to meet the higher costs of essentials like food, housing, and transportation. The FOMC is strongly committed to returning inflation to its 2% objective.
Oh wait, that's good. Good
Restoring
news.
price
They're
stability is
restoring
essential
it. It's
to
gonna go
achieve
higher.
a sustained period of strong labor market conditions that benefit all.
This is how you know I know
I'll
absolutely
review the
nothing
current
about
economic
fundamentals.
situation before turning
I'm
to
just here to
monetary
watch.
Economic activity expanded at a strong pace over the past year. For 2023 as a whole, gross domestic product increased 3.1%, bolstered by solid consumer demand and improving supply conditions. Activity in the housing sector was subdued over the past year, largely reflecting high mortgage rates. High interest rates also
Market
negatively
makers are
weighed on
teasing
business
us.
fixed investment.
Giving good news, then bad news,
The
then
labor
good
market
news, then bad
remains
news.
relatively
That's
tight,
why we have
but supply and demand
consolidation right now,
conditions
guys.
continue to
That's
come into
why.
better balance. Since the middle of last year, payroll job gains have averaged
That is enigma.
239,000 jobs per month, and the unemployment rate has remained near historical lows at 3.7%. Strong job creation has been accompanied by an increase in the supply of workers, particularly among individuals aged 25 to 54, and a continued strong pace of immigration. Job vacancies have declined, and nominal wage growth has been easing. Although the jobs to workers gap has narrowed, labor demand still exceeds the supply of available workers. The strong labor market over the past 2 years has also helped narrow long-standing disparities in employment and earnings across demographic groups. Inflation has eased notably over the past year, but remains above the FOMC's longer-run goal of 2%. Total personal consumption
Didn't he already say
expenditure
that?
prices, or PCE prices, rose 2.4% over the 12 months ending in January. Excluding the volatile food and energy categories, core PCE prices rose 2.8%, a notable slowing from 2022 that was widespread across both goods and services prices. Longer-term inflation expectations appear to have remained well anchored, as reflected by a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. After significantly tightening the stance of monetary policy since early 2022, the FOMC has maintained the target range for the federal funds rate at 5.25% to 5.5% since its meeting last July. We have also continued to shrink our balance sheet at a brisk pace and in a predictable manner. Our restrictive stance of monetary policy is putting downward pressure on economic activity and inflation. We believe that our policy rate is likely
Downward
to execute
pressure.
for this tightening cycle. If the economy evolves broadly as expected, it will likely be appropriate to begin dialing back policy restraint at some point this year.
That's bullish, no?
But the
This is
economic
bullish news.
outlook is uncertain, and ongoing progress toward our 2%
I don't know how this
inflation
works.
objective
Someone who
is
knows
not
fundamentals,
assured.
please help me out here.
Reducing policy restraint too soon.
If it goes to my
could
target,
result in a reversal of
it's
progress
rigged.
that we've
Market's
seen
rigged.
in inflation,
Guaranteed.
and ultimately require even tighter policy to get inflation back to 2%. At the same time, reducing policy restraint too late or too little could unduly weaken economic activity and employment. In considering any adjustments to the target range for the policy rate, we will carefully assess the incoming data, the evolving outlook, and the balance of risks. The committee does not expect that it will be appropriate to reduce the target rate until it has gained greater confidence that inflation is moving sustainably toward 2%. We remain committed to bringing inflation back down to our 2% goal and to keeping longer-term inflation expectations well anchored. Restoring price stability is
S&P on the
essential
highs at like some
to
sort of
set the stage
displacement
for
higher.
achieving maximum employment and stable prices over the longer run. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Federal Reserve will do everything we can to achieve our maximum employment and price stability goals. Thank you.
Thank you, Mr. Chairman. You've acknowledged the Fed likely waited too long to raise rates when prices shot up in 2021. we can't make that mistake again, Mr. Chair, at the expense of workers. If the Fed waits until unemployment starts increasing, it may be too late to cut rates in time to save American jobs. Why shouldn't the Fed act now to prevent workers from losing their jobs rather than
Wait.
reacting after the fact?
So we're well
Quite
aware of
literally,
that,
Carson.
of course, and
Yo,
very
why?
conscious,
Come on, man. You
avoid
gotta
it.
pump.
And
Come
what
on,
we
man.
said
Why is he
if
debating?
what we
All right.
expect
We need
and
some
what we're
bullish
seeing
news here so we can hit
strong
TP.
growth, strong labor market, and continuing progress in bringing inflation down. If that happens, if the economy evolves over that path, then we do think that the process of carefully removing the restrictive stance of policy can and will begin over the course of this year.
I mean, I know we've had this conversation publicly here or privately also that, working people are hit the hardest with inflation. They're also hit the hardest when companies try to cut costs with layoffs.
Now this guy for
This
sure
town
smokes.
Too often seems to forget that
Sounds like my
wealth-
friend Elijah.
Maximum employment is part of the Fed's dual mandate. Let me ask you about bank supervision. Senator Scott mentioned that. Last year's bank failures illustrate the need for strong oversight. SVB grew too big, too fast. Fed supervision didn't react decisively enough. The Fed, in response, undertook an assessment of its supervisory process to identify
What?
and address gaps related to the speed, the force, the agility,
Bro,
if that's the right word, of its supervision.
Bro.
Explain what
That is
concrete
crazy.
steps the Federal Reserve's taken to strengthen supervision and any specific areas where work to make improvements is ongoing.
So this is a very broad area of work. There are, many people in the Federal Reserve System who are involved in supervision, thousands of them, and there's a rule book, and so there's been careful study and thought and a lot of listening to understand how we can meet those goals of being quicker and more effective. Basically, is how I would say it. If you look at Silicon Valley Bank, we weren't quick enough and we weren't effective enough where we were in, and so we're working hard to develop a new rule book and another set of practices, which is still going to be evidence-based and fair, but it's going to involve earlier interventions and more effective ones. And I think this is work that's ongoing and will be for some time.
Thank you. The job of the Fed, of all public officials, is to serve the American people, not their stock portfolios. We've seen abuses in this body. We've seen abuses at the Federal Reserve. I wrote to you last month asking the Fed to identify substantive penalties for board officials who violate the trading rules.
Yo, why
Where is
does he
that in the
actually sound like
process?
that? It's
And
bothering
I
me,
expect
bro.
these rules in place.
All
over
right,
the
guys.
next month.
Today we're gonna start trading the Nasdaq. And
Our own
I'm feeling
Inspector
bullish.
General gave us 6 things to work on. I read the list from beginning to end, and the 6th one was what you said. And I
He's
just
the voice
said, "We're gonna do
actor
all
of
of
Jabba
these.
the Hutt.
Let's get going." So we've done 5 of them, and we're working on the 6th.
And it will be finished within
Ugh,
6
I
months. when
can't.
we're back.
I want to get it right.
His
certainly.
throat just sounds so
Expect so.
strained.
Expect
Sounds
so is
like-
a better answer than hope so.
Like I know sometimes I get a
One
dry
last
throat
question.
from
More
talking
and
so
more
much,
many
but like it's
companies
worse.
use algorithms
Worse than that.
combine competitors' price information to engage in what they call dynamic pricing or surge pricing. You know that corporate PR teams worked hard on this. Just another way for corporations to make it
I'd like to
harder
see
for
speed
consumers
past
to
this
seek
high
out
right
lower
now.
prices and to pad
If we're
corporate
going higher, I
profits.
want to see
Are
some
you
sort of
concerned that the
displacement.
wide adoption of these
Because
price
this
gouging
previous high right here
strategies,
is that
pricing
15-minute fair
schemes, if
value
you
gap,
will,
right?
will
So if we
contribute to
invert it, we're
inflation?
looking for support from it.
I think it works both ways. Let me say that we're well aware of this trend and we're monitoring it. Remember that prices go down when there's no one in the store, and they go up when there are a lot of people. If you're doing dynamic pricing, same thing with the ride companies. It works both ways. I don't know that it have implication for inflation. It would certainly have implications for consumers who need to be informed.
You think that this kind of surge pricing might lower prices overall?
That's my understanding is that the idea is that in slow periods, prices actually go down, and in busy periods they go up.
But these are sophisticated economists working for these big companies, and they're not going to do things to lower their profits.
I think the price mechanism is incredibly important in our economy. I think we need to give companies the freedom to do that as long as they're not fixing prices or failing to disclose the nature of the price changes to the public.
I have a few seconds. Research has indicated constrained supply was behind a significant amount of the inflation we've seen over the last few years. If the supply chain, for instance, of autos had been more resilient, or if there had been more housing availability, would that have made your job easier?
Yes, in a word. Yeah, a big part of the inflation was, and we saw it in 2023 when the supply chain problems unwound and when the labor supply shock that we had unwound as well, we saw inflation come down very quickly in the second half of the year. But it's also down to, tight monetary policies playing a role as well.
Which leads me to the plea with you to speak out about inflation, about the contribution of corporate profits and greed to inflation. Thank you.
Oh, I know you are done. That's true. Well, I was
Find yourself agreeing with me more and more often? Is that what?
that would be a nightmare, and I'm awake. So
Bullish news.
what I
They
will say,
laughed.
however, is that the fact of the matter is that so often, if in fact,
Yeah, 100%
actually
sure, bro.
what you said, which was remarkable. The fact that
And that's just like
60%
every
of
time Jay
Americans
Powell speaks, though,
today
he's like the
can't afford a
master of changing the
$1,000
subject.
emergency. I can't imagine how the average millennial affords a down payment for a home. I can't imagine how they take into consideration when they're looking at a snapshot of their financial future, fixing and repairing or having a plan for obsolescence that happens for every homeowner in the country. I think the issue is far more complicated and would love to delve into that over the next 4 minutes and 18 seconds. But my first question is a combination between the challenges of illegal immigration.
Yes, that's what it's called, Mark. Deflection. Master
It
of
seems like
deflection.
every single week, there's another story of another city underwater attempting to feed and house millions of illegal immigrants, and American taxpayers are footing that bill. Like I mentioned in my opening statement, just recently in Denver, we saw city workers having their hours essentially zeroed out so that the city could allocate more resources for the illegal immigrants. In San Francisco, they say that the average cost between San Francisco
No, that's actually crazy. Because then that means I get paid more too, right? For sure.
is
I used to work at
almost
McDonald's.
$4 billion.
Not to brag, but one of the busiest
Couple that
McDonald's.
with New York, you see Governor Hochul
Down.
bringing out the National Guard.
Every time I charge more for a burger,
to
I'm
help
pocketing
reduce
some of
the
that.
impact
You know what I'm
of
saying?
crime. At the same time, Mayor Adams says he needs more money because the state of affairs from illegal immigrants
Yeah, that's why I'm pocketing it every time I charge someone instead of them paying
scaring
me.
the citizens and reducing the opportunity for
No, that's
businesses
actually
to
dumb though. I
return
don't get that.
to New York City. So my question is, can you explain how?
But isn't that just
our
like
economy is
supply and demand kind of
expected to
thing?
continue shouldering the burden and the costs because of illegal immigration, and what, if any, information do you have as it relates to the impact of this surge of crime in our major cities on the economic outcomes of those cities? Because I heard the discussion that when you have more folks in the store, you have more shoppers, except for these days, when you have more folks in the store, sometimes they're just there to steal.
Bro, I go to McDonald's for iced coffee like
Quoted
pretty much
by
every
State
morning,
Farm
and
earlier,
like,
and it was an
so that
accurate
shit is
quote
so
that
expensive
people
now. Like I might as well
say
just go to
right before
Starbucks
that,
or
what I
something.
said was
Or
immigration
I mean, I could
policy,
make it at home,
very
but I'm
important,
too
very much
lazy
under
for that.
discussion, and it's none of our business. We don't set immigration policy. And we
You're
don't
telling me I
comment
have
on
to
it.
brew
So,
my coffee, put it in the
So
fridge
you
for a
commented
night?
on immigration. So my point, though, is that when you're going to tell a story, please tell the whole story, especially when the nation is frustrated by nearly 10 million folks by the end of this year coming into the country and having the kind of negative impact on prices, on crime, on the challenges that everyday Americans, especially Americans living in the poorest.
Yeah, the only thing is like
parts of
my
America,
fridge,
face on a daily
like, cause I
basis.
moved, right? My new fridge now.
as you accurately
Well, I
quoted,
didn't really
was
move.
referring- said
I moved a
over
long
time,
ass
so I
time
wasn't
ago. But my
referring to
fridge now,
history
we got a
related
new
to what you
fridge,
agreed.
and
So
it doesn't
I
have
wasn't
a ice
staying as
cube
far as I possibly
dispenser, so
could
that
from
means I
the
have to like
political
manually
context,
make
and,
ice cubes, which is
you know,
also.
it's really not appropriate for us.
I don't
We're
feel like
independent
doing that,
utility,
bro.
and the way we do that, one of the ways is by staying out of political issues that we really aren't assigned.
First world problem.
So the kinds of issues you're talking about are very, very real. I don't deny that, but they're really not for us.
So the Fed does not consider the impact of 10 million illegal immigrants coming to our country and the costs associated with
Bro,
those
it's a
illegal
struggle out here. I gotta make my own ice
consider
cubes for my iced
the
coffee. Like,
impact
it's
on
crazy,
states
bro.
like New York or California or Illinois, where the devastation of crime ravaging the poorest Americans has an impact. We don't take that into consideration.
So, we do, and so does the Congressional Budget Office, we do try to estimate population, and we try to estimate the effect of immigration, legal or illegal, on the size of the workforce and on GDP. If you look at the Congressional Budget Office has, as you probably know, a detailed assessment of all the things like that. We don't really have a way, and we do look at the finances in the aggregate of state and local governments, and the hiring that they do. So that's something we look at, but we wouldn't do a very specific assessment like that. I mean, CBO would, but
You still have SMT on the highs, just saying, with the YM. So.
Okay, Scott, Senator.
We're gonna go run higher. We're gonna need it pretty soon.
Before I begin my questions, I want to celebrate that in the past year, we have seen the first Latino Federal Reserve governor and the first ever Latino Federal Reserve Bank president. These are historic milestones that show we are finally making progress, something that I have been at for quite some time, to the leadership of our economic institutions. So I want to applaud that. And Mr. Chairman, I hope that progress can continue and extend to the rest of the Federal
I'm a
Reserve
version
staff.
for Rally Gap on 5 minute.
thank you.
I agree with my friend.
Yeah, I
the
was
ranking
looking at
member,
that. This
that
right
when
here
you tell
earlier
a
was
story,
supporting from it.
You should tell the whole story. Mr. Chairman, are you aware of the Washington Post February 27th article that says the economy is roaring and immigration is a key reason?
I don't recall that, but I would have read it.
Let me read it to you. Immigration has propelled the U.S. job market further than just about anyone expected, helping cement the country's economic rebound from the pandemic as the most robust in the world. It goes on to say, economists and labor experts say the surge in employment was ultimately key to solving unprecedented gaps in the economy that threaten the country's ability to recover from prolonged shutdowns. Would you take issue with those statements?
There are a lot of adjectives and adverbs in there that you wouldn't see in.
And all these
Fed-
people are taking
but
taking stabs
Take
at
out
him.
the adjectives and give me on the
Yeah,
substance.
the story is, I think broadly, it is that there was a very significant increase in the size of the workforce last year, and it was.
I should
happening
probably
all
take
during
this
the
off
year,
my
and we were
screen.
wondering what
I
it
just realized I was there
So
the
it
whole
was really
time.
two things. It was labor force participation, but it was also immigration. And if you look at the Congressional Budget Office numbers, it kind of makes sense because there was a lot of growth. Wages were coming down. The economy is booming, and those are probably
Trust me,
partly in
bro.
part affected.
Trust me.
This is without making any judgments on immigration or immigration policy, but I think that's an economic
I'm not
fact.
suggesting that. I'm just suggesting the facts are
Yep.
that we had 10 or 11 million jobs that were going unfulfilled in our economy. They lacked the productivity that is necessary for success economically. And as part of that, clearly, immigration helped fuel part of our revival coming out of the pandemic. In fact, those were the people who were the essential workers when the rest of us were staying home. So I agree we need to do what is necessary to have a regularized border, but I also think that just to create the context of immigration as a scourge is absolutely wrong. Let me turn to another question. In my view, the sticky inflation we've been seeing in the housing sector is principally due to the massive nationwide housing shortage. The Fed's monetary policy report attributes the shortage to restrictive zoning, high interest rates, and tighter underwriting by banks. I would also add to that list underfunding of key HUD programs that shore up and expand our supply of affordable housing. If the housing supply shortage continues to grow, are we likely to see continued housing inflation?
Yes, we are.
And housing is already becoming less and less affordable for low and middle-income Americans. According to the National Low-Income Housing Coalition's 2023 Out of Reach report, a worker earning the minimum wage in New Jersey would have to work 2 full-time jobs to afford a modest one-bedroom rental home at fair market rent. Do you agree that increasingly unaffordable housing is a problem for the economy?
I think there are two things going on. One is a longer-term housing shortage, and the other is the pandemic effects and the associated higher interest rates, which are things that will pass through. When all that passes through and rates are normalized, we'll still have the underlying housing shortage, and it's going to be causing upward pressure on housing prices.
Now, the monetary policy report noted that, quote, home purchases by low-income households have fallen disproportionately more because mortgage lenders impose maximums on the ratio
I'm gonna fall
of
asleep,
a borrower's
bro.
debt service payment
I'm
to
gonna
the
be
borrower's
honest.
income. I'm worried about how this dynamic will interact with the recently proposed capital requirements proposal, which, according to analysis from the Urban Institute, would disproportionately increase the cost of mortgages for Black, Hispanic, and low and income moderate borrowers. Given this, isn't there a risk that if the capital rules implemented without changes, that it could make it even harder for disadvantaged borrowers to attain home ownership?
There is a risk like that, and we're very focused on it.
And hopefully you're working to mitigate it.
Yes.
Thank you. Thank you, Mr. Chairman.
Thanks, Chairman. Senator Rounds from South Dakota.
Thank you, Mr. Chairman. Chairman Powell, welcome back. Look, first of all, I've appreciated the way that you've approached the discussions in front of this committee, and I understand your desire to stay as neutral as possible with regard to the politics involved in an election year. But I do have some questions here, specifically with regard to the Basel III Endgame proposal. An analysis of that proposal found that 97% were either opposing it or expressing
Interesting question, for sure.
concerns. In the hearing last March on the Monetary Policy Report, you stated that the Federal Reserve is a consensus organization, and you said, and I quote, I will do everything I can possibly to bring people together in consensus and have a capital framework that could be broadly supported. My question to that is, do you currently believe that there is a consensus on this capital framework?
I believe that we will have one. I'm fairly confident that we will have such a consensus when we do move forward.
So we could expect that you will probably not call a vote on the proposal until you believe that there is a consensus?
I think that's right. I mean, we're just in the process of
But can
digesting the
someone give me a
comments
quick
that
like little rundown? Like, who are these people talking to Jay Powell, and why is Jay Powell like
Are aware, I've
the most
reviewed
important
several
person here?
times on the concerns that I have with regard to Basel III Endgame, including I'm concerned about the lack of transparency, the negative effects on mortgage lending and home affordability by disincentivizing banks from offering high loan-to-value loans that primarily help first-time home buyers and low to moderate income borrowers. I'm concerned that the proposal will make buying a home harder than it already is for many. And further down the road, I fear that it could disincentivize mortgage lending from the largest banks, particularly with regard to the secondary market and their impact on even smaller banks that do business with them. Would you be willing
Okay,
to
yeah, that makes
withdraw
sense.
the proposal
That's what I
or
thought. It was just like
re-propose
Biden,
with
low-key.
significant modifications,
Surely he's just the front
particularly
man, right?
addressing the concerns that I and others have on this committee, raising specifically with regard to the impact, and I'm thinking of Freddie and Fannie in particular, and what the impact might be. What would you see as the process involving those particular issues?
So on those issues, we're well aware of and very focused on those issues. We haven't decided what to do about that yet, but we get it on those issues. In terms of process, we're not at the stage of making that decision. I will say, if it turns out to be appropriate, when we get to that point, for us to repropose parts or all of the thing, then we won't hesitate to do so.
Okay, thank you. Makes me feel a little bit better because I do think there are some very serious problems that would occur if the Basel III Endgame as proposed goes into effect. And I most certainly am hoping that the Federal Reserve will find a consensus on this. And it sounds like that may very well include some significant modifications if it were to be brought at all. Is that a fair statement?
I expect there will be material and broad changes to the proposal before it comes back to the committee for consideration, the board for consideration.
Thank you, sir. Let's just, with regard to the economy today, a limited level of price growth is believed to help facilitate economic expansion. reduce the risk of recession, and help businesses and consumers plan. However, during the Biden administration, we saw inflation climb to 13%, and those prices are now the new norm. I know that you make it a policy not to comment on the administration's fiscal policy, but it is well known that I really do believe that high inflation and high prices have been a direct result of President Biden's policies, failed in many cases, that the Federal Reserve has limited tools to address some of the problems that these policies created. We talk about supply side versus demand side on these costs. What have been some of the unintended consequences from raising the federal funds rate as rapidly as you felt that you had to as the chair and as the committee? What are some of those? I know that we talked a little bit about SVP and the failure there, their inability to look at treasuries and the increasing interest rates and so forth, but can you talk a little bit about some of the things that you've seen that were negative with regard to trying to respond to those high inflation rates?
Yes. So high interest rates are hard for businesses. They're hard for people. They're the thing they're the tool that we have to use to bring inflation down. And our job at this time, when high inflation comes, it is the Fed's job to restore price stability, and that's what we're doing. You point to the losses in banks.
In price, I'm looking at the RDRB right now,
and
just in case you
obviously the
guys,
supervisors, and that
my
was us,
line is in the way,
who
actually, I just
didn't,
realized.
didn't get to that problem. We were aware of it, but we didn't probably
This RDRB
appreciate
right
it
here
enough.
should be
Another
respected
surprise,
if
though,
we're
is that
we're
were
pretty
able
close
get
to
this far
target,
and get
so.
inflation down this quickly without seeing a big increase in unemployment, and that's just a great result. That's just a surprise. It's not consistent with the historical record, but it's a really positive thing.
Thank you. And I would just know the only tools.
The RDRB is much more
tools.
Yeah,
Yes.
Thank you. Thank you, Mr. Chairman.
thank you.
Senator Warner of Virginia is recognized.
Well, thank you, Mr. Chairman. Chairman Powell, it's great to see you. I would point out to my good friend from South Dakota.
If I'm being
I
honest,
do
at
think,
this point,
you
if
know,
I was personally in the
we've gone
long,
back
I'd
at
just call it here. I'd be like, I'm
year
out, bro.
To 18 months ago, nobody would.
It's
have
just
predicted
so
this happening.
slow. Like, this is not what I want
know
to be
you're not ready
in.
to declare victory by any means, but the fact that inflation has come down, and I actually think some of the things, like the CHIPS bill, the infrastructure bill, and some of President Biden's policies have actually kept the economy growth rate at the levels that have allowed you to bring down inflation without seeing a dramatic rise in unemployment. And again, that'll be something we'll probably have the opportunity to litigate over the next 8 or 9 months. I want to take my time on issues around less about monetary policy and more about regulation. I think we can never presume that we're out of the woods on financial stability, as we saw with the New York Community Bank yesterday, the stock plunge and then the capital infusion. One area that I raised with you a year ago, I want to re-raise today, and that is non-bank lending.
I don't know if I answered this question. Are you still
Non-bank lending in
interested in
terms of
taking anything still
non-financial
while he
firms now
speaks?
is
No, not
actually
really.
exceeding regulated bank lending. And let me
Not
be
with
clear
price
on that.
action like this. Not interested.
Non-bank
I'm just tape
financial
reading,
sector has
right?
done productive things in our society over the years. But when folks like former New York Fed President Dudley and former Fed Governor Grosvenor recently said that they had worries about this reliance on the non-bank financial sector could lead to overall economic lack of stability. I guess, what do you think? I've got a 3-part question. What do you think are the risks as we see this push-out effect of more and more lending going outside the regulated perimeter to the non-bank sector? How much do we really know about these institutions? And one of the things, they have very smart, sophisticated investors, but if those very smart, sophisticated investors said, well, hey, we don't like the lending profile right now.
How long does
and
this
we want
usually
you to
go
not
on
make any
for?
additional loans for the next 6 to 9 months. Do you think our system would be
Is
able
this
to
like an
pick up the slack?
ICT kind of thing where like they go on for hours? Jay Powell says something random
You
for
have-
like
you have
2
the regulated
seconds and then
banking
the
system
market
where you've
goes
got a lot
crazy.
of transparency. You've got deposit insurance. You've got access to
One of those.
the discount window and all those things. Regulation. If you go outside that, most of the funding that we see now in these vehicles is sophisticated investors who are actually limited partners, meaning they can't pull their money out. They've signed a contract. They've funded these deals, and so what
No,
you
but
see now.
to be fair, we did
in the
have London
non-bank financial
expansion,
sector
right?
Is a significant.
Just using
it's
technical
that
analysis
so it's-
alone,
it
it's like
doesn't have the run
London
risk.
expansion, we
The qu-
expect
the
some
point is, the
slow
bigger
price
it
action
grows and the
in
more
New York AM.
diverse it gets, it is happening outside the regulatory perimeter, and you worry that when there is another crisis, you'll be surprised, but there will be ways that financial structure too can break down, and it does break down in ways we don't anticipate. So I think we need to be smart about the way, about intermediation is absolutely moving out of the banks into the capital markets.
I
and
wish
into
I could do
non-bank
2
financial
times.
institutions. That's what's been happening for a long, long time.
Sometimes I
just think
wish
we need to be
like
thoughtful
real-time
about
trading, you
understanding
can
where the
just
risks
like
are emerging.
click the
And that
buttons where it's
sophisticated
like, you know,
investor may
fast forward, like
rightfully
back
say,
testing, you know what I'm
"Hey, we
saying?
don't want you to lend anymore for a
All right, CS
X
knows.
period of time," but that may then, at that moment of crisis, mean that the lending capability.
I think he left already. Wait, that man sent the message and dipped.
Until I got a little better explanation recently, why the large regulated banks weren't more complaining about this non-bank lending. But as I got to understand a little bit more of the, and again, I'm not per se criticizing on the non-bank lending, but many
Market
of the
makers
regulated
watching
banks
this,
actually
like,
lend to these large institutions, so they make
Thinking they're
they
sly,
make
just
money off of these
crawling price up
relationships.
to the
Maybe
target.
that's again an explanation of why they're not being more.
All right, see you,
critical. We're
Clemson.
at 40
See you
seconds left, but I would like
tomorrow.
to come back to
If you
another
join
thing that
for
we've talked
NFP.
about a lot, and that is the question of use of the discount window.
All right, see you
believe
guys.
One of the
Or
original tools.
see you,
that the Fed
Clemson.
had,
We're still here.
I know banks say, well,
Kind of boring.
we're concerned about the stigma. I've got some legislation.
I'm
that would
honestly
actually
down to
require,
call it here. Like, I feel like I
mandatory
tape
use
read pretty well
of
today
the
already.
discount window.
So
I'd love your comment on that. And
if you
also
guys are
just the
down to call
idea
it,
that
I'm down to call it.
having
I'm
it-
extremely tired. Or do you guys still want to watch this? Because, like, yeah. All right, yeah, let's call it here. I'll see you guys all tomorrow for NFP. Tomorrow will be a good day, I'm pretty sure. So let's get it. I mean, today's like, once again, it's like even with slow price action, you can still like, you know, dissect price. But you know, it just be like that. Sometimes we just don't have to take trades, right? Even if we're right, we don't have to take the trade. All right. On that note, everybody have a great day. Thank you, everybody, for coming by once again, as always, right? So take care.